You are listening to Charting Wealth for Friday, the 11th of March, 2016. We always start with IYY on our two-day chart provided by freestockcharts.com. If you don't have our charting layout and you don't have our video, How to Read a Stock Chart, you need to get them. All you have to do is sign up for our newsletter at chartingwealth.com. That's what this is, the daily review. So, IYY, that represents the total market with the Dow Jones U.S. Total Market Index Fund and ETF. We had up candles starting all the way back on the 16th of February, and we had our first red open box down candle on the 9th on the two-day candle of this month, March. And then we have the candle that ended on the 10th. Again, it is a green open box, even though there was the smallest bit of down movement today that actually is recorded on our charts, 0.01%, not much down movement, but just a little bit. And what do we have going on? Well, we've seen the charts slipping sideways basically for the last two-day candles. The derivative oscillator has been losing some of its speed. That's shown by a light green box when the charts are in an up move and a red box when the chart's in a down move. We have the Bollinger Bands, still have some movement, allowing some up movement, but really sliding sideways. We have a confirmed, of course, crossover at this point of the two-day trend line. That has been broken. And the MACD and the signal line are moving ever closer together. Now, if we go and we look at what happened intraday on IYY, we see that it crossed over. The charts did going down back on the afternoon of, the afternoon of the 8th of March. And then the market really slid sideways throughout the 9th and the 10th. It slid sideways in the morning and then lots of down movement in the afternoon that it recovered. Actually, about twice again as much down movement that the bears drew the market down and the bulls were able to pull it up. The gold actually, I'm sorry, not gold, the SPY at the end of the day was actually up 0.08%. The total market, like we said, was down 0.01%. So that is where we did cross over in the afternoon and ended crossed over on our two-day trend line. Derivative oscillator's been heating up ever since the MACD rolled over on the short chart. So we're in a confirmed down territory on the short chart. Now, we are looking for a crossover going back up. And I'm actually looking here at the chart as it did back on the 16th of February when the market rolled over. If we rolled back up, if we see that happen again anytime soon before the large chart rotates over going down, that would be a potential time for us to jump in and follow an up move when the short chart rolls over, corrects itself, and then moves back in the direction of the big chart. That's when we look to get in safely and find some good up movement that we can ride. So we're currently in a down movement on the short chart, and we're in an up movement on the big chart for IYY. Now, I mentioned just a minute ago SPY, that's Standard & Poor's 500. It was up ever so slightly today at 0.08%. It's not yet broken through the two-day trend line, all the derivative oscillators losing energy, and the MACD is converging somewhat. Hasn't anywhere near crossing over yet on the big chart, the MACD, the moving average convergence divergence indicator with the signal line. MACD is the big indicator we use, works great in a market that's moving up and down, not so good in a slipping sideways market, but we're not having that happen yet. Has a bit over the last two-day candles. If we look at what went on intraday, many times SPY, the Standard & Poor's 500, looks very similar to IYY, not always, and in fact, it was not down as much as IYY was today. It didn't cross over below the two-day trend line. Did cross over going down on the MACD back on the 8th. And that derivative oscillators continue to pick up speed. And the MACD and signal line have continued to diverge somewhat. So again, Waiting to see if this is going to be a short-term correction, if it's going to roll back over, going back up as we saw back on the 12th. Just to give you an idea of what it looks like when it crosses over going up. If we see the MACD cross over the signal line along with the derivative oscillator, that is a good sign the market's going to be moving up. Well, if we see that happen soon, while the big chart is still in an up movement, that's when we look to see if there's a good point for us to get in and safely ride that upturn. Okay. Now we're going to range back out to our 2-day chart. We're going to take a look at the Qs. What is the Qs? That's the NASDAQ 100. We have our second candle outside the 2-day trend line, and it again looks very much like a doji. It is a doji that's forming so far. Now that candle for 310.16 is not yet complete. It's a 2-day candle. It won't be complete till the market closes on Friday the 11th. For the record, the Qs was down 0.15% for the day. We do have a doji, which means it is a type of Japanese candlestick. You can read about dojis, D-O-J-I. It basically is a signal that shows that the bulls and the bears had about the same amount of power. That's why the market closed right about where it opened. And what we have when we have a candle like that is a showing of lots of indecision. Derivative oscillators losing a lot of losing some of its speed. The MACD and the signal line are about where they have been over the last few days. Really aren't converging significantly at this point. But the market is losing some of its upward momentum. If we look at the 4-hour chart, what do we see? Lots of down movement in the afternoon. And the bulls were able to pull the market down substantially. The bears were able to push it back up before the close. Derivative oscillators in the negative. Of course, the market switched over going down back in the afternoon of the 7th of March. So we're waiting to see. We've, of course, crossed that 2-day trend line a couple of days ago. We're just waiting to see what's going to happen. Is the market going to roll over and go back up, cross over, give us a potential buy-in point? Haven't seen that happen yet. We will continue to watch for it. That's where we are on our 3 indexes. Now we're going to range back out to our 2-day chart and lastly look at gold, which was up substantially today, 1.61%. Again, gold has been moving up on our chart since it crossed over, going up back on the 16th of December. Really slid sideways for quite a while, moved up there at the beginning of January, leveled off toward the middle of January, and then right there about toward the end of January took off and really took off in early February. Then about mid-February slid sideways for a few days and then started moving back up again and continues to move up. Again, lots of up movement today, 1.61%. As I said, green open box. Although we do see the MACD and the signal line getting closer and closer together and the derivative oscillators in the negative. Let's go to the intraday chart and see just what's going on in our 4-hour or half-day chart. Crossed over going down on the 9th, and then those of you who had made some money in the run-up starting around the 3rd, hopefully had taken that profit. If you did stay in, you saw the market move back up, recovering some of those losses, all of those losses and more that it started taking on the afternoon of the 8th. It recovered and actually closed as actually higher than it had all the way back on the 4th of March. So not yet crossed over going up. So again, the short-term chart is still in a down move. Big chart still in an up move. If you want to be safe and careful, of course, you're not going to look to get in until that crosses over, going back up. The MACD crosses over on the signal line. Still negative on the derivative oscillator. Not feeling as good as we have in the past about our 4-hour chart on gold because of this sideways slippage in gold. Particularly with gold, makes our 4-hour chart here over the last few months not be that reliable a chart. But the good news is our big chart's been reliable. And as long as the big 2-day chart continues to be reliable, you can look to use the same type of trading that we look for when we have our short chart crossover and start going up, or crossover and start going down as far as looking for out positions. Well, That is where we are at the end of the day on Thursday as we go into Friday the 11th of March. We sure appreciate you being with us. Remember, we are not a stock calling service. Everything we talk about here on the program is for educational purposes only. We encourage you to open a virtual trading account. Make yourself a virtual millionaire. You can do that on virtually any of the online brokerage firms. You can go there, open an account, become a virtual millionaire, and start learning to trade. Now, once you learn to trade and want to spend your own money and make your own decisions, that's up to you. But as you're learning to read these charts, please practice. It's all about practicing. It's going to help you. Perfect practice makes perfect. Pay attention to what we talk about every day. Put the things we talk about to use. Read all you can. Study all you can. Listen to all of our training videos. Ask us questions. Let us hear from you. Tell us what we can provide as far as additional training. We'll be happy to work on doing that. We would appreciate your input. If you really appreciate what we do, do us a great favor. Go to iTunes. Sign up for subscribe to our daily podcast, and also give us a 5-star rating. Say something great about us. Also follow us on Facebook, Twitter, like I said, iTunes, YouTube, Instagram, you name it. We try to be there. God bless. Thank you so much from chartingwealth.com.